Hi everybody. Let's have a look at today's fundamentals. Hello Peter.
Hello.
So the green pack is still in the race against the counterparts, right?
Yes, the US dollar was still losing ground, and actually it has increased the pace of the losses yesterday. I would expect the positive market sentiment to continue in a sense, and that provided the support for riskier assets such as commodity currencies, the Aussie, the Kiwi, the Canadian dollar. Overall, the market's expectations for the Fed to slow down its rate hiking path seem to intensify, and that tends to drive the USD lower in the big picture.
And how about US stock markets?
US stock markets seem to show some hesitation once again. There are increased worries about big mega cap tech companies, and the results of Alphabet as well as Meta's yesterday tended to intensify such worries. Especially about Meta, it was characteristic that the revenue figure met its target, but on an EPS level, it was lower than expected. And that tended to generate increased question marks about the profitability of the company, especially given the new project, etc., etc. I would expect to see whether Apple's and Amazon's earnings releases are going to be justifying those worries. Should that be the case, we may see a reversal of the market sentiment towards a more cautious sentiment. Yet overall, I would note that the earnings releases as such, in the majority at least, are better than expected. And that's a good sign.
Is gold on the rise?
Yes, it is. However, on the flip side, maybe the rise of gold's price was not as wide as we had expected, especially given the wide drop of the US dollar. I would be expecting that gold's bulls seem to be hesitating somewhat, or at least are somewhat constrained, and are waiting practically for the Fed's meeting next week to see how the bank will be expressing itself and what's the way ahead.
And what's on the calendar for today?
Well, we have a high number of high-impact financial releases. I would make a start with ECB's interest rate decision. Now, the bank is expected widely to deliver 75 basis points rate hike. It's characteristic that EUR/USD implied probability of around 98% for such a scenario to materialize. And I wouldn't be surprised even to see the bank maintaining a hawkish tone in its accompanying statement. The inflationary pressures in the Eurozone do not allow the bank to actually ease its rate hiking path. Definitely there will be a wide discussion, there's already a wide discussion among ECB policymakers on what the best toolkit actually is to tame inflationary pressures, whether that's going to be through hiking rates or whether that's going to be through a quantitative tightening. And overall, the decision as such could provide some support for the euro. There is a catch though, and the catch relates mostly to ECB President Lagarde's press conference, as there the bank president may have to get out of the script. And in that case, we may see Lagarde practically playing down the hawkishness of the bank, which in turn could weaken the euro. So the decision, ECB's decision today, it's not only about the release as such, but also extends the volatility for euro pairs during Lagarde's press conference. Now, a bit later, we're getting from the US the weekly initial jobless claims figure. We're getting also the durable goods orders growth rate, but the highlight of releases for today is expected to be the US preliminary GDP rate. It's for quarter 3. It's expected to accelerate, actually get out of the negatives and accelerate and reach 2.4% quarter on quarter on an annualized basis. such a release could more or less practically drag the US economy out of the technical recession it was in for the past 2 quarters and ease market worse for a possible deeper recession in the US economy in the coming quarters. Overall, I would expect, on the one hand, the release to provide some support for the US dollar, as it may imply that the situation in the US economy may not be as bad as expected. On the flip side, we may see also the US dollar experiencing some safe haven outflows. Now, during tomorrow's Asian session, we're getting practically the release from Japan of Tokyo CPI rates. The highlight, though, of the Asian session is expected to be BOJ's interest rate decision. The bank is expected to remain on hold at minus 0.10%. Overall, the bank is expected to keep its ultra-loose monetary policy settings unchanged. And I wouldn't be surprised to see the bank practically reiterating its forward guidance that interest rates are to remain at the same or even lower levels. Overall, the dovishness of the bank is expected to be maintained, and that could weigh somewhat on JPY.
Any final comments, Peter?
We had yesterday BOC's interest rate decision. The bank delivered a 50 basis points rate hike, which was lower than what the market had expected. Overall, the CAD tended to weaken at the time of the release and the following minutes, but the market sentiments were so positive and US dollars weakening was so strong that USD CAD quickly, more or less, turned lower once again in favor of the CAD, which would imply that the releases as such should be seen also in the wider context at the moment of the release. We have a market which is very, very sensitive to fundamentals and to market sentiment, which may overcome surprises in the releases. So I would be expecting the market sentiment for the time being to remain somewhat positive, which may continue to provide some support for US stock markets as well as risky assets.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yosef.
So welcome to the technical analysis part of the presentation for today. In front of your screens you have the US dollar index for chart. All charts which are to be presented are to be of the same time frame, unless otherwise stated. For the time being, we note that the US dollar index has dropped, broken the 110 support line, moved lower, and seems to be bouncing back up. The interesting part is that if we drill out to the daily chart, then we'll see that practically the upward trend line, which has been initiated on the 9th of February has been broken. Actually, it's on the 10th of February, and it's very interesting, as that would imply a shift in trend. Now, drilling back into the forward chart, let's make the necessary corrections first. So we definitely have to turn the 110 from a support line to a resistance line. And let's go hunting for a new support line. Let's release the chart somewhere here. This is true here. And the other thing that I would like to make is to readjust the S1. That would be at 106.15. Should be key. Let's readjust it. So there's a wide spectrum here, which actually I'm not leaving uncovered. We're going to be narrowing the support line with this one coming into play. And that would be the 108.40. Have a second look at it. Yeah, pretty valid. Good. I'm keeping that. Let's correct also the labels so we get a clear view. $109.5. 108.40. $110 to be the first resistance line now, given that it was broken to the downside. And the second resistance line to be placed at 110.70, with the final resistance line being placed at 111.60. Okay. So we note practically that the pair dropped, hit the floor at the 109.35 support level. So we mark that. The question is, has the direction changed? And the US dollar index seems to have broken the downward trend line guiding it. So the initial reaction would be yes, it has changed, and that would imply also a possibility of some stabilization. Should that stabilization take place here, I would expect the index to remain between the 110 resistance line and the 109.35 in this spectrum here. For a bullish outlook, we would require the index to rise, clearly break the 110 resistance line, and start aiming for the 110.70. There is a catch here though. The RSI indicator below the forward chart was quite below the reading of 30, corrected higher, has reached that level, and seems to remain there. So that may imply that there are still bearish tendencies in play here, and that the recent rise during today's European, late Asian and European session was merely a correction higher. which would allow the price action to restart its downward movement, and that would be practically shifting the downward trend line more to the right, in which case we may see the price action dropping, breaking the 109.35 and start aiming for the 108.40. It's an interesting chart on whether this downward motion is going to continue or not. Mind you that the price action practically stabilized after hitting once again the lower Bollinger Band. You can see that also happening here and here. And since then has risen, has created considerable space between the lower Bollinger Band and the current price action, which may allow for some room for the bears to come in and take over the price action's direction once again. Okay, let's have a look now at Euro USD. Here it is. Euro USD, which did hit a ceiling at the 1.0090. It didn't advance further. However, on the other hand, we see that there is still the upward trend line. The RSI indicator is above the reading of 70. Actually, it corrected just below it right now. So, what's the direction? For the time being, we tend to maintain still a bullish outlook, and we view the correction lower as just that, a correction. For a change of trend, we would require a clear breaking of the upward trend line, which was incepted, let's have a look, on the 21st of October. That was on Friday, almost a week ago. And should the upward trend line be broken, the initial reaction may be a stabilization between parietal level and 1.0090 resistance line. On the other hand, should the bears take over, we would expect the price action to drop, break the upward trend line pre-mentioned, break definitely the S1 parietal level, 1, and start aim for the 98.75 and may add to an active surge to hit the S2. On the other hand, the main scenario for now is that the price action may continue correcting lower until it hits the upward trend line and jumps back up, possibly breaking the 1.0090 to mark a higher peak than this one. So for the time being, we tend to maintain a bullish outlook. Also note that the price action has some space between itself and the upper Bollinger Band, which may allow for some room for the bulls to play. The RSI indicator was above the reading of 70, has now corrected slightly below it, but it's still at high levels. So it should not be easily neglected. Okay, let's have a look at GBP/USD. By the way, a small reminder from our producer here is that feel free, and I want to underscore this, feel free to write any pair or any trading instrument you would like to see us perform a technical analysis on. And maybe we have time today. If not, we could prepare something in the next technical analysis presentation so you could have a look and find more assistance with your trading. GBP/USD on the rise, correcting lower. Let's make a small adjustment here. Actually, yeah. I don't like this narrowness here. It's too close. Hence, I'm going to be correcting a little bit higher. Let's release the chart. And actually, the R1 is not that bad. No, I'm keeping that. Okay, let's readjust. Let's correct the labels once again a little bit higher. That's it. So, GBP USD was on the rise. It rose from the lows of the 1.1425 support line, hit a ceiling at 1.1615, and seems to be correcting lower. For the time being, we tend to maintain our bias for an upward motion, given that the price action remains above the upward trend line. And we also note, though, that there is an indicator below the 4-hour chart has just broken below the reading of 70, correcting also lower, which may imply that the bullish sentiment is fading away somewhat. As long as the price action, though, remains above the upward trend line, we tend to maintain our bullish outlook. And in which case, we may see cable dropping further, hitting on the upward trend line, bouncing back up, breaking the 1.1615, and start aiming for the 1.1740, which is very, very close for the pound. It's a matter of hours to cover this. Could even break the 1.1740 and start aiming for the 1.19 within a day. On the other hand, should a stabilization occur, I would expect it to remain between the 1.1615 and the 1.1425 support line. The first sign, the first signal of a trend reversal and abandoning of the bullish outlook would be a clear breaking of the pre-mentioned upward trend line. While for bearish outlook, we would require a clear breaking of the pre-mentioned upward trend line, i.e. a drop, break, and then a consecutive break of the 1.1425 support level, aiming for the 1.1250. Let's have a look at USD and JPY. Give me a sec, see how it go. USD JPY dropping, reversing the drop at the 145.50 support line. So practically there is a correction higher. All of the charts we have seen up until now tend to suggest that the US dollar was oversold. And now corrects higher practically. There is a common feature here at the European session. Hence, as the pair found a floor at 145.50, at least for now, we tend to expect that the price action may stabilize somewhat between the 147.70 and the 145.50. On the other hand, though, the RSI indicator, which is correcting higher, is still at rather low levels, which may imply that the price action may experience some continuous bearish sentiment on behalf of the market or be influenced by it, in which case we may see a continuation of the downward movement by reversal of the correction, breaking of the 145.50 support line, and the price action to start actively aiming for the 143.50 support level. For a bullish outlook, we would expect the price action to rise, break the 147.70 and start aiming for the 150 resistance level. Beautiful chart. Also note how the price action practically corrected higher after flirting with the lower Bollinger Band. Actually, it broke it for a short period, which would be more evident in the 1 hour chart. However, that's not the question here. Since then, there is some distance between the lower Bollinger Band and the price action, which may allow for some room for the bears here. Okay, let's have a look at the other safe haven currency pair. That would be USD-CHF. USD-CHF was dropping, yen stabilized, breaking the downward trend line. We expect the stabilization, the sideways movement to be maintained, most probably with the limitations, the main limitations being, let me make a small readjustment here, between the 0.9920 resistance line and the 0.9735 support level, most probably in this area. While should we see the buying interest being extended for USD-CHF, whether that's because the US dollar is strengthening or the CHF is weakening, we may see the price action rising, breaking the 0.9920 and start actively aiming for the 1.0050. Last scenario for USD-CHF to be covered would be the bearish scenario, in which case we may see the price action dropping, breaking the 0.9735 and start aiming for the 0.9690. Okay. Mind you that the RSI indicator has corrected higher, is currently at 40, at 40, almost 41, which may imply that the overall bearish effect is slowly fading away for USD-CHF. So we may see the stabilization taking place here. Let's move to commodity currency AUD-USD. AUD-USD, which was on the rise, yet almost hit the 0.6530. It actually corrected before it hit that level. Let's have a look at it. And that would be now placed at 0.6520. 10 pips change, nothing much. So the initial reaction would be an abandoning of the bullish scenario for AUD-USD, at least for the time being. And that would be also supported by the fact that the RSI indicator below our 4 chart has hit the level of 70 and corrected lower since then. It's actually must be around 60. Yep, it's 60.6. So there was a substantial correction lower in the sentiment from the prior bullish tensions and tendencies that were evident. Should the stabilization occur, I wouldn't be surprised to see the price action remaining between the 0.6520 and the 0.6345. At this point, I would like to make another correction. Or not. Let's keep it that way. Now, for a bearish outlook, we may see the price action dropping further, breaking the 0.6345 and start aiming for 0.6195. A bullish scenario would imply practically a reversal of the current price direction, and the pair's price to rise, breaking the 0.6520 resistance line, aiming for the 0.6670 resistance level. It would be something like this. Let's have a look at the second commodity currency pair. That would be USD CAD. USD CAD, which dropped, almost reached for the 1.35 support line and seems to be stabilizing somewhat. But before we move on, let's make the necessary corrections in support and resistance lines. Definitely the S1 has to switch its role towards a resistance level and be colored in red, given that the price action has dropped below it. Let's go hunting for a new ultimate support line, which could be placed here. We had a nice throw here. That would be on the 1.3225. Let's color this in green. Let's lock this in and widen the chart. Let's make the necessary corrections on the labels at 1.3975. At 1.3835. At 1.3660. At 1.35 the first support line. At 1.3350 the second support line. And at 1.3225 the final support line. Okay, we're set. Now let's make the analysis. First thing to figure out is the direction of the pair. Now there was a downward trend line, downward movement, which we cannot miss out. Yeah, I would place it somewhere here. And that downward movement seems to be broken, or seems about to be broken. Overall, the upward movement tends to resemble more sideways motion. And should the downward trend line be broken, that would cause us to initially switch our bearish outlook in favor of a sideways movement, possibly between the 1.3660 resistance line and the 1.35 support line. Should, on the other hand, though, that stabilization enable USD CAD to find extensive fresh buying orders along its path, we may see the price action rising, breaking the 1.3660, and that would be a prerequisite, and start aiming for the 1.3835. At least that would open the gates for R2. On the other hand, should the CAD continue to strengthen, we may see the price action practically shifting the downward trend line to the right, dropping, definitely breaking the 1.35 support line. So it would be something like this, break of the 1.35, paving the way for the 1.3350. Mind you, would require a lower true than this one to have a clear bearish outlook. It's quite interesting how this will be developing over the next 24 hours. It was characteristic also that BOC's interest rate decision, which delivered a rate hike but a narrower one than what was expected. It was expected to hike rates by 75 basis points. It didn't. It actually hiked by only 50 basis points. And that tended to disappoint traders. Let's have a look at it so that you can understand. We're drilling now to the 1 minute chart. I know it's a little bit fundamental, but it's interesting to see how the market reacted on a technical level at the fundamentals of BOC's interest rate decision. Now this was it. Insert, shapes, ellipse. What we're talking about is this. See how the price action rose, jumped. It was jumping about 70 pips if I'm correct. It closed here 1 minute, the next minute 60 pips. It was 60 pips up. But the question here was that despite the bank actually undershooting its target, the market had an initial wide reaction, but it quickly corrected once again lower and continued at the same levels it was before the interest rate decision. All of that happened within the space of about 1 hour. It was a wild ride yesterday for the cat. Okay, drilling back to the 4-hour chart, deleting the ellipse, readjusting the chart. So should the US dollar gain, we may see the price action rising, breaking the 1.3660 and start aiming for the 1.3835. We haven't looked at the Kiwi for a while, and I plan to. The Kiwi, which was on the rise, and actually, in my opinion, still is. Now this upward trend line was broken. Let's form a new one. Note how it has broken above the R1 and is now correcting lower. Possibly it will break it, but let's make the necessary corrections anyway. Let's find a new resistance line somewhere here at this peak here. Could be wider though. This would be even better. Okay, let's keep this one. And that would be red, please. The 0.6190. Let's readjust the chart. Let's make the necessary corrections on the labels. Starting with the S3 now being placed at 0.5535. Ouch, that was a mistake. Let's correct that. Second support line being placed at 0.5650. Third support line, which is now being tested and is about to be broken, would be placed at 58.10. First resistance line being placed at, used to be a support line, but has now been turned into resistance, and it's the 0.5940. R2 to be placed at 0.6080. And the final resistance line being placed at 0.6190. For the time being, we tend to maintain a bullish outlook for NZD-USD, given that the price action is still above the upward trend line, which was incepted on the 21st of October. Small slight word of warning here. Note the RSI indicator below the 4-hour chart. It had hit the reading of 70 and is correcting lower. Actually, right now it's just above the reading, just below the reading of 60. Yeah. So practically the bullish effect is slowly fading away. It's interesting to note how the price action practically was flirting with the upper Bollinger Band, yet now has corrected widely lower. Now, should the bulls maintain control, we may expect the price action to continue correcting lower, hitting on the upward trend line, rising. Definitely would require a higher peak than this one, possibly aiming for 0.5940. On the other hand, we may see the price action dropping a little bit further, breaking the 0.5810, definitely breaking the upward trend line, signaling a trend reversal, and stabilizing between the 0.5810 and the 0.5650. That would be implying practically stabilization of the pair. While should the price action drop further, breaking the downward trend line, the upward trend line, we would require also breaking of the 0.5650 before adopting a bearish outlook. I know it sounds a little bit to the extreme and the bearish outlook may be adopted earlier, not in my opinion. I would like to see it dropping further. Okay, let's have a look at gold's price. Gold's price, which rose, and interestingly enough, the precious metals price stabilized, and it's beautiful how the 1660, which used to be a resistance line, see here, has now turned into support line like before, here and here. So that has to change now, and we're coloring this in green. Placing a new resistance line at this peak here. That covers also this peak here. In red, that would be the 1730. Let's wind this. Final support line being placed at 1615. Second support line being placed at 1640. First support line now being placed at 1660, given that it has provided support. Second support line being placed at, first resistance line being placed at 1685. Second resistance line being placed at 1707. And final resistance line being placed at 1730. Now there's a clear upward trend line in regards to the trend. I would like to note though that the last peak of the precious metal was lower than the previous one. So we may be in for a stabilization of the yellow metal's price. In which case I wouldn't be surprised to see the price action breaking the upward trend line and remaining near the 1660, maybe even extending up until the 1685, a sideways motion. For a bullish outlook, I would expect the price action to rise, break the 1685, and start aiming for 1707. For a bearish outlook, we would expect the price action to drop, break the 1660, break the upward trend line, and start aiming for 1640. The RSI indicator below our chart is correcting lower and is currently aiming for the reading of 50, also implying that the market seems to remain a little bit indecisive after a correction lower and tends to support the notion of a sideways movement for now. Let's have a look at US stock markets, making a start with Dow Jones. Dow Jones, which seems to be hitting a ceiling at the 32,000 resistance level. Let's make some small corrections here. There you go. Let's raise this a little bit higher. That would be the 32,070. The 32,680 still seems to be valid. And even higher, the R3 33,470. Okay, the question is there still a bullish sentiment or not? Yes, there is. And we can see it by drawing an upward trend line. It's being heavily put to the test. You can see that the differentials of the upward movement are shrinking, narrowing. So practically that would imply that the bulls may be slowly but steadily losing their appeal for Dow Jones. On the other hand, we have to note here that the price action of the RSI indicator is still above the reading of 70, which may imply that the price action is at overbought levels and may be correcting lower. The RSI indicator, though as such, remains above the reading of 70, which also implies on the other hand that there's still bullish pressures and bullish sentiment in the market. Mind you though that the price action has some distance between itself and the upper Bollinger Band, which could also allow for the bulls to take over once again. Now, should the bulls take over, I would expect the price action of Dow Jones to break the 32,070 resistance line and start aiming for the 32,680. On the other hand, should a stabilization occur, we may see the price action dropping, breaking the upward trend line and start aiming for the 31,180. So practically stabilization would imply movement somewhere here. On the other hand, maybe not as wide. On the other hand, should the bears take over, clearly we would expect the price action to drop, break the upward trend line, definitely break the 31,180, and thus pave the way for 30,450 support level. Let's have a look also at Nasdaq. Nasdaq, which jumped in the past few days and stabilized at higher levels than before. I'm not saying high levels as such, but definitely higher than the ones it used to be. Let's make some corrections here, some adjustments. I would like to have a clearer peak here, and that would be at 11,670. It could go a little bit higher. 12,000, sorry, 12,020 that would be. This has to be turned into a support line and pushed a little bit higher. 11,060. Sorry, 11,360. Let's color this in green. 65. Okay, 60. Let's also find a new ultimate resistance line. I would be placing it somewhere here. And that would be in red please, 12,300. Twelve thousand 20 being placed as the second resistance line. 11,670 being placed as the first resistance line. First support line, which is about to be tested right now, is the 11,360. Second support line being placed at 10,970. And the final support line being placed at 10,680. Let's have a look. Yeah, 10,680. Here we are. Now the question is there still an upward movement? Let's draw the trend line. Yep, it's still present. So for the time being, we tend to maintain a bullish outlook for Nasdaq. By the way, let's US 100 cash. Let's color this in black. And we would expect the price action to correct lower initially, possibly break the 11,360, yet bounce on it, and rise, break the 11,670, which marks a previous peak, and the next peak should be higher. On the other hand, the RSI indicator has reached the reading of 50, so we may see a stabilization of the pair between the 11,670 and the 11,360. And for a bearish outlook, I would require a clear breaking of the 11,360 and the upward trend line, with the price action of Nasdaq actually aiming for the 10,970. That should be about it from all of us here at IronFX. Best wishes for solid trading.
Hello, in today's video we will have a closer look at technical analysis. Traders tend to use a combination of fundamental and technical analysis when trading the markets. Technical analysis deals with financial market activity. The technician or technical analyst examines price variations that take place daily, weekly, or over any other fixed time period. These variations are represented graphically or in charts, hence the name chart analysis. Technical analysts don't focus on the fundamental variables that may influence market prices, but study the price movement of different instruments in the financial markets. Technicians believe that you cannot forecast an exact market reaction, even all pertinent information about a particular market was accessible. Because there are so many variables interacted at once, it is easy to overlook certain factors at the expense of others that may be on the news or what is currently trading. The technical analyst thinks that with the exception of big news like natural disasters, all material market information is reflected in the price, but these elements very often are ignored. When observing the financial markets, it becomes clear that there are trends, momentum and patterns that occur over time in somewhat similar but not precisely same ways. Whether for stocks, commodities, currencies or bonds, charts are self-similar because they display the same pattern. A chart does not reflect the underlying causes, but the mood of the market. Technical analysis is therefore an examination of general human psychology. Fundamentalists hold that fundamental factors and price fluctuation are causally related. In other words, if the fundamental news is good, the price should go up. Conversely, if the news is bad, the price should go down. However, long-term examination of price fluctuations in global financial markets reveal that such a correlation is only marginal and only to a limited degree evident in the short-term horizon. On a medium and long-term basis, it does not exist. In actuality, the opposite is true. Most frequently, when the economy is still in a state of recession, prices begin to rise in a new bull trend, even if there is no justification for it. In contrast, when the economy is still expanding, prices begin to decline in a new bear trend without offering any compelling reasons to sell. The goal of technical analysis is to spot these trend changes. Technical analysts believe the history repeats itself and that patterns in price movements very often repeat themselves. This repetition is attributed to market psychology. Thank you for watching.
Okay, all fine. Hey there. Thank you, Martin. Thank you, Abdul. Thank you very much for the confirmation. Okay, let me begin. Welcome to another IronFX live trading session on a Thursday evening. Okay, thank you for tuning in. It's nearly the end of the week. Okay, thank God it's Thursday and I'm here hosting this live trading session for you guys. Okay, my name is Chen Yongjing and I will be your host for today's session. Nice to meet you all. Hey, thanks, Awa. Yeah, okay, Ken. Thanks for the confirmation. Hey, where are you guys tuning in from? Are you guys from around the world? So we can see roughly where you guys are from. Okay. As disclaimer, as usual, this webinar should not be considered investment advice or even a signal service or an investment recommendation, but instead educational material only. Hey there, nice. Hey, Cobus, you are from South Africa. Wow, Martin is from Germany. Khan is from the UK. Wow, we have everyone from all over the world tuning in. That's what I like about this education series. Wow, Zimbabwe even. Everyone from all around the world gathering in this Zoom session. And we are all learning. Okay, let me get on to the good stuff. Okay, just a quick one. On the IronFX website. Oh, Nigeria. Okay, nice. Okay, on the IronFX website, to get this kind of webinars and education, you guys can go under IronFX School and Webinars. So you can sign up for the free webinars coming up this month, especially now you can see that I'm doing the live trading session and my name is there. Okay, let us begin. Let me change the dark mode. Okay, is there any currencies that you guys want me to take a look at before we begin? Well, I will be presenting using smart money concepts for today. Have you guys heard about smart money concepts? I'm using that mainly for my trading, personal trading too. Okay, Euro USD. Okay, that is a very good one. Let's do it. I'll clear the chart. Okay, let me clear the status, the appearance. Let me clear the lines. Okay, nice. Okay, let us begin. Okay, we are looking at the daily. First, I want to get a rough story on what is going on in the market. What is going on? Why? Price had a very, very bullish movement going upwards due to the weakening of the DXY. Okay, using smart money concepts, I've noticed that price is constantly bouncing. But why? What is smart money concepts? Yes, that's a very good question. It is like trading using supply and demand, but I'm using a very refined supply and demand zone. And I also look at liquidity. I focus a lot on liquidity and where the highs are and where the lows are. So for example, looking at the 1 hour chart, okay, maybe 4 hour chart, this is a bit too big. Okay, so price bounce off this area and this area. So what are we looking for? What did price clear? It cleared. If I use a magnet tool and hold the shift key, I can move all the way back and sell side liquidity, where price went down. To just imagine it as the market coming down to clear everybody's stop loss, clear everybody's positions out before they accumulate enough momentum to continue moving upwards. The same thing can be seen here with price coming down just to clear out the sell side liquidity. Okay, so same thing, I draw a line using the magnet tool all the way backwards. So you can take a look, price had cleared the sell side liquidity. So if you actually zoom in, you notice that these areas are not equal lows where price actually did clear. It actually did clear all the liquidity. That's why price is moving higher and higher. So I also want to have a clear explanation on why price at this area in particular, how you could have entered on this to the upside. Well, so later I'll show you guys a forecast which I did for Euro USD on last Saturday. So last Saturday was on the 22nd. I actually forecasted Euro dollar to actually reach this area, and it just hits my take profit. So I will show you guys how. And I'll show you guys the forecast which I wrote. Okay, over here, have you guys heard about market imbalance? Markets imbalance. Let me type out in chat. Markets imbalance or fair value gap. Have you guys heard about that? It's very, very useful in trading. If you guys are not using this, you are missing out. You are really missing out. Please take notes of this market imbalance and the fair value gap. Okay, so adding that in, you can take a look right here. Price came down. Why did price came down? To clear the market imbalance that is resting right here. So for a lot of traders like to, wow, I want to enter a nice euro. Let's say you are looking for a long. So you mark out these points of interest. So you mark out this nice little candle right here. You'll be telling yourself, nice, I'm looking for a price to get back down here, and then I start to search for an entry. So nice, so I can enter with my long position here, maybe stop loss at the bottom somewhere, or can be here. But you notice, price did not come down. Then you'll be telling yourself, damn, I just missed the entire trade. So I was waiting the entire day, waiting. And then price didn't even come into this area. So this is where I'm bringing you guys in on the market imbalance. How do I spot the market imbalance? How do I spot that? That is when there is this particular area. Let me zoom in. I'll zoom in closer and closer so you guys can see very, very clearly. I don't want you guys to miss this out. So you can actually take a look. Previously, price did not tap into this area. This specific area, it's a market imbalance. Do you like it if the price moves and all of a sudden it just shoots up? It's not clean price movements. I don't like that. So when that happens, price eventually has to come down. So with the use of market imbalance, we are kind of forecasting or potentially predicting where the markets might go to. So in this case, the price actually went down here and then it shot up. Exactly the same in that scenario. Hey, so let me draw it out clearly. I'll remove this out, and then we can use the replay button to see what actually happened when price tapped into that area. So this area is actually, you can actually use this, you can call it a retracement buy entry. But before you even confirm a buy, we always look for break in market structure. So break in market structure is when price breaks the high, breaks the previous high, which is located right here. So price went up and let me set okay, break of market structure. Okay, it's a bit small. I will make it bigger. Okay, break of market structure. The price broke. So how do we see that the price has broken? Price go down, up, go up, down, but it broke again. This area was broken. However, it was a liquidity grab. So that liquidity grab with this break of market structure, we can start to look for a buy entry. So looking for buy entry, we are not, as I mentioned earlier, we are not just looking at a random candle at the bottom and taking it as a demand area. We enter via the imbalance. So let's do a quick replay. So maybe we can see how price reacted to that area. So you can see, let me play the replay up. So price closed this way. You can see this area, price did a very nice, I'll draw the same. So it did that, came down, cleared liquidity, and it shot up. So this area right here is the imbalance where you are looking for price to come down to tap in. You can tap a few times and then off it goes. That's where you are looking for your entry. It's also known as the fair value gap. Fair value gap. So let us start this. Maybe I'll increase 3 updates per second. You can see price tapped in, and continue moving upwards. This is on the 4 hours chart. Okay, I'll exit this replay right now. Exit this. So maybe let's take a look into the smaller time frame. Since we are on the 4 hours time frame, most of us, are you guys actually day traders? Are you guys day traders where you guys enter a trade during the day and then you close the trade within the same day? So let me know in chats whether you guys are intraday traders. Intraday traders, and what time frame do you guys look at? I would be very interested to know. Before I tell you guys what time frame I look at, I want to know what time frame do you guys look at during the day. What time frame are you guys at? So I move on to the... Okay, Cobus, I hear you. I see you. 15 minutes to 30 minutes charts. Martin, nice, intraday. And you do it between the 5 minutes and 1 hour time frame. Hey, that's very good, very good. I like to hear that. Because what I'll be doing, I'll be going down to the 5 minutes too. So that's why I'm asking you guys, in case you guys might think it's a little too fast or too crazy in the smaller time frame. So let's take a look at a possible entry where we could have. So I just mark this out clearly again. What is this area? Is the H4 market imbalance, or also known as the fair value gap. So insights on the right side. So you can see price tapped very, very nicely into the area. So where could you have entered? This is an entry which I already entered, and I can show you guys. I want you guys to spot it. Where is the break of structure? So I'll just do a quick one. Price, zigzag, and then gets smaller. Gets so small. Look at this. Goes small, and it goes up. But what we are looking for is the larger movement. So I'll be drawing this way. So you can see price went up and cleared this area, or this small little area. Okay, I think I need to draw it properly. So I zoom in better. Okay. Down, up, down, up, down. So you see the structure, this area. What do you notice? What is going on? The zigzag, up and down zigzag, is getting smaller and smaller. So this tells me, first of all, that the bearish momentum is weakening. To add confluence to that, price has already hit into the H4 market imbalance, and then it went up. What did it do? It broke structure. So where did it break structure? It broke this structure right here. And where could we have entered? Where could we have entered? So I'll clear this chart out, clear this out. So I'll draw it nicely. So this area had a break in structure. And then now we are in the 15 minutes. Where could we have entered? Same thing, using markets imbalance or the fair value gap. So I will be using the rectangle And I'll draw it out. You can take a look right here. Right here, there is a fair value gap. You can see very clearly, price came in just to tap into the fair value gap area before price shot all the way. So I actually don't use any indicators. So this is actually the company's accounts. That is why there is the Ichimoku cloud. But on my personal account, there is 0 indicators. I don't use any indicators. I feel that indicators are lagging. It's built on programming. There are maths calculated behind the scene. It's all old data. What we want is the feel of the markets, where we look at it based on data and facts, indisputable facts, that there is a market imbalance and price has broken structure. All these are indisputable facts that an indicator cannot compare with or cannot argue. So if you use a Bollinger Band, you use a moving average, use all these kind of other indicators. But then when you combine it, you start to notice one indicator. So let's say moving average crossover or RSI. The RSI can tell you that it's oversold, but the moving average tells you otherwise. So indicators can be very, very conflicting. That's why I do not use indicators. I would rather look at the market as it is, based on data, facts, and facts. So this area, market imbalance, tapped in. I'll draw it out nicely using the rectangle. So maybe I'll change it to blue so I can differentiate. So I'll call this the M15. M15. So you guys already know M15 market imbalance. So let's take a look inside. Right. Okay, Cobus Smith. Hey, you are asking where can you learn more about my strategy? Well, you can find it on YouTube. You can search smart money concepts. There are quite a few YouTubers doing it for free. They're teaching you guys the good stuff for free. But then I'll show you where you can learn it to. Where you guys can learn it to. So let me continue this. I'll explain this finish first before I show you. So the M15 chart. Price goes in. Tapped very nicely. It only has to do one tap. Just one tiny tap. So maybe we can see 5 minutes. Is there any area where we could have refined this trade? So there's nothing to refine. There's no imbalance within the larger time frame imbalance. So I'll just use it. I'll just stick to as it is on the M15. So let's do a chart replay on what happened. So replay. Let's look at the breakout structure. So we take it as it is. It is on the, I'll change it to New York time. So everyone is in sync of what is going on. So this is 6:45 a.m. New York time. So if you guys want to be in sync with me, can take a look. I set it to UTC -4 New York time. So let's start it. Price, okay, 1 times update. Okay, 3 update per second. Okay, let's do it. Price goes down, breakout structure, broke market structure. And then let's take a look. Since we have already spotted out this market's imbalance right here, we can do this with our entry right here and stop loss at the bottom right here. Why is it at the bottom and not here? And not here, and not here? Because we are expecting this area to be the respected low, where you don't expect price to come further than this area. So if price actually comes down to this area, sorry man, your stop loss has been hit. Well, your analysis was wrong. That's why just keep it a tight one, risk 1% of your account, and boom, let's go. Let's go, guys. So we enter, I'll start the replay. So price tapping in. Price has already tapped in. And let's take a look how price reacts to the buy side liquidity. You are not just looking for what do you call it? You're not just looking for TP all the way up to maybe a zone that you have all the way back on the left side of the chart. So always remember, when you guys want to take profit, always must have some kind of explanation. You cannot tell me. So if you were here with me in real life, if you are telling me, oh, you guys want to take profits here, take profit there, but there always must have a logic. Always must have some kind of reasoning on why you actually entered your trade and where is your take profit zone. You cannot just tell me it's an estimate or you roughly think or based on your gut feeling. If it's gut feeling, you're trading it wrong already. So I set this area as my first take profit area, maybe a TP3, the first minor take profits area. So you will notice that usually when price clears a previous high, price continues going up. So we can see maybe there might be a reaction to that area. Okay, it's going. I think I increased the speed. Should I increase the speed? I want to, but let's go by 10. Okay, there wasn't much reaction, but price eventually hits the take profits after around, how long did it take? Take a look. So it took me one full day of just holding before it hits take profits. But then again, I'm still looking for another long because my bias is on the long side. So the first take profit has already been taken. So let me show you guys another trade that I took last night. So last night I was looking, okay, for me last night, the timing is probably around maybe 9 a.m., 10 a.m. New York time, UTC minus 4. So for me, it was during the night time. So let me exit this replay. I'll show you guys the trade I took yesterday. Same thing. I had a very nice trade entry here. Very, very nice trade entry here. And then I took take profits around here. Can we trade with you? Sorry guys. I'm not supposed to do this on stream. But thank you for asking that, Cobus. So yesterday, I took a trade here. And then I just took profit the moment price just hits my buy side liquidity. But again, we want to see what is going on. How did I fine tune it? So I can show you guys my analysis later that I actually drew yesterday. It was already published yesterday where I was already expecting where price could be headed to, especially this area. How did I refine it? So looking down, I went down to the 5 minutes chart. So looking down at the 5 minutes chart, I'm looking at this area like, damn, it's so messy. And then to many traders, retail traders, you guys will draw some kind of triangle looking for breakouts. Oh, nice, I got a breakout entry. But the thing is, using the breakout entry, you guys would have, instead of entering, my entry was very, very at the bottom. My entry was very close here. But you guys would have entered late around here if you guys don't use smart money concepts and try to see the smaller picture. Okay, it sounds very wrong to say look at the smaller picture, because normally you want to take a step back, take a look at the big picture. What is going on with the charts? What is going on? What is the larger 4 hours, daily, 1 hour time frame? Guys want to know, then after you guys zoom in. But what I mean by taking a closer look at the smaller picture is I zoom into the 5 minutes, 4 minutes, 3 minutes, 2 minutes, and even the 1 minute charts to take a look at what is going on. I want to know the story. What is the chart currently crafting? So to me, it's like art. The chart is moving. So I didn't see anything. So before that, in the day I was looking, so it was 8 here, 8 a.m. Okay, 8 p.m. at this line here. For me, it was 8 a.m. in the morning when I was looking at this chart. So I was trying to find out a place where price could, it's not a confirmation. I'm just marking out areas. So I want to mark out an area where price might head to. So I went down to 4 minutes. Is there anything? Is there a point of interest somewhere? I'm just looking, just a quick glance. So moving back, I go to the 3 minutes chart. So you take a look, 3 minutes chart. Is there anything? Then maybe there's something. Looking at this long wick here, I might be thinking there might be liquidity lying down here where price might go to, but it's not clear yet. It's not that clear yet. Not that clear yet. Okay, so I can go down to, I can mark this area out. Mark this area out. Mark this area out. I'll set this as the sell side liquidity, just due to this long wick and this area. It might have been a sell side liquidity too. I can mark it out, but I cannot confirm that price can head to that area. I cannot confirm it. I can only mark it out. So I mark this out. Price nearly tapped into that area, but it did not. So since I already got my picture on what is going on, potential liquidity, you guys notice that I focus a lot on liquidity. I imagine it as an area where the market comes down to clear the stop losses of other traders. I just imagine it that way. An area where market comes down, swipes you out of the market and continues heading upwards. It gathered your money. For you, it might be a loss. So it gathered all the money accumulation. That's just my thought process, just an imagination on what might happen at this area. So again, you can see price did a zigzag, and it formed a, what is this area? It's lower than this, so I call this a lower low. So price goes up, continue, goes down, then it's smashed down, goes up, comes down. By this area, we might be expecting price to continue going downwards, that's where many traders actually just smash on their meta trader. Sell, because they think it's going to go down. Wow, there's so much area. So there's so much clean area. Here. Price can continue going down. But since we are in a bullish market, the overall larger time frame is bullish. So okay, let me clear this out first. So we are looking at the larger time frame is bullish. We do not want to be counter trading the market. We do not want to, if the market bullish, wow, it's going up. But then there you are there on your computer there. Oh, I think I want to sell, do a nice sell. But the market goes against you since it is a bullish trend and hits your stop loss. So always remember to trade with the markets. Do not counter trade. So same thing, price goes here, and as a smart money concept trader, I only wait when price shows me what it wants to do. So shows me what it wants to do. It broke market structure. So immediately I mark out. Immediately you can mark out this area. Break of market structure, BMS. I call it BMS, break of market structure. So maybe I can put it to 20 so you guys can see pretty clear. So I think I have to get it thicker. Okay. It's pretty clear. Break of market structure. And then you can have an entry right here. And I'll clear this out so you guys can see where is the market imbalance. So maybe on the 5 minutes first, 15 minutes first, because that's the intraday candle pricing in the where people are looking at. So there is no imbalance that I'm looking at. I don't see anything. So that's where you start going smaller and smaller into maybe a 5 5 minutes time frame. So moving into the 5 minutes time frame, I actually noted out that there is market imbalance right here, this area, and this area right here. So I was looking for price to tap into that area and go up. But price actually took quite a while. It was frolicking. It was doing this sideways movements. But again, always remember, even though I entered a trade, I entered right here at this market imbalance, stop loss at the bottom. Why do I do that? Price could, because if I set it here, you just want to have a nice, wow, you want to show your friends, you have a very nice 1 to 10 risk to reward, so you can post on Instagram, show you guys, wow, look at this, my trading is so good. Then you guys have a very nice risk to reward, clearing the high. So we call it the, I mentioned again, the buy side liquidity. So do not do that. We don't want a tight, very tight stop loss just to be cleared, to clear your stop loss, and then your forecast goes in the right direction. It will really hit your psychology very, very hard. So it hits your psychology very hard. You'll be very, very pissed off, very angry, or you might be sad that your forecast was right. But due to your tight stop loss, you lost the trade, but it could have been a winning trade. So as usual, set my stop loss at the very bottom. So I'll clear this area out. So, and I mentioned again, I expect this area to be respected, a respected low. So I'll draw out the market imbalance area. It's on the M5 chart. So it's very small, it's right here. So with my entry in place there, I could have I entered a 1.67 risk to reward, and I let the runners run. So what do I mean by let the runners run? I close a small percentage of my trade right there before I let the market continue doing its thing, and I actually have a higher take profit at the very top of the market, very, very top, but I'll show you guys later on. Just for now, we focus on this nice trade. So I let the runners run, continue to my overall larger H for the 4 hours take profit area. So why do I set? I just say it once more time and one more time. Just hopefully you guys can grasp it. So I set the stop loss here in case price comes down to clear all this liquidity. There's so much liquidity here where price could potentially come down just to clear before heading up, potentially, or it might just come down and hit my stop loss. But why? Why is it so wide? Again, you guys, when you enter a trade, you must have a idea invalidation area. I'll type it out in chat. Idea invalidation. It's very, very important. So you're telling yourself, oh, break of market structure, price can go up, continue going up. But then price goes lower and lower, and you don't understand why. You don't understand why. You have to understand your trade. So in this particular instance on the M15 chart, I'm just looking at the overall. My ideal invalidation area would be if price breaks this area. Why do I call this my ideal invalidation area? Invalidation, yeah, you're spelling right. Invalidation, ideal invalidation. So why is it important? Same thing. If you draw the zigzag, why did I enter this trade? I took it as way on market structure due to the zigzag, right? The zigzag got broken. But the same scenario can happen right here. Price goes up, down, zigzag. But if the zigzag gets broken lower, what do you expect? You expect price to come lower already, right? So you expect price to possibly go back up before it comes down to clear your stop loss, to hit your stop loss. So let's say if price decides to come down here and idea invalidates my idea for this buy, I'll start looking for a retracement, another fair value gap, or set my take profit to my break even. So price can potentially hit it and I close my trade before I let the price continue down. So you are managing your trade knowing that your idea is already wrong. So you can reduce your losses instead of letting the entire stop loss get hit. It's very important skill sets to master. You have to add it in. Okay, so moving on, can take a look how price reacted to the area on the M5 chart. So do a quick little replay right here. So I'll just speed things up. Times 10 already. So you guys don't have to just stare at the screen. Hit, take profit, it close a bit and continue heading upwards. And then my final take profit was hit somewhere on top here. Not here, somewhere higher up. It's not here yet. It happened today. But I will show you guys on the larger time frame. So with that being said, I also entered another trade right here. I remember very, very clearly. Setups usually happen during the London or the New York session. So I'll exit this replay right here. Okay, price coming down, but over here, had a nice entry. I only had a 1-to-1 entry because I already had enough of the markets, already had some nice profits. I only did a 1-to-1 risk entry. Okay, so can see it's here. Why is it here? Same thing. You guys notice there is a market imbalance. This happened last night, Wednesday, 26 October at 5 a.m. New York. So same thing here, there is a market imbalance. So how did I do that again? Let me draw out the zigzag. So price, down, up, down, 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 goes down. And then it went up to break structure. This area, this structure has been broken. Same thing. Let me mark it out very, very clearly on the chart for you guys to take a look. But this was honestly a risky trade. Why is it a risky trade? I also knew it was a risky trade. It was very, very risky. Because I do not like it if price closes like that. Although it broke the structure right here, it is only a weak WICK. It's only a weak close. What I want right there is a body, the body of the candle to close above this area. Just close it. I want it to be higher up. So I reduce my risk to 0.5%. With that being said, I actually set this area as break of market structure, but I bracket it as it was a weak one. Pretty weak one. So I know how much to risk. The moment I write weak on the market, WEAK, risking 0.5%. So marking out the market's imbalance zone where price could come back down, I had my entry there. Stop loss below, same thing, because of these liquidity areas right here where price could come down and clear. So my stop loss with that and the take profit at the next high. Buy side liquidity netted me a 1 to 1.28 risk to reward level. So again, maybe this area, I haven't explained how come this price maybe hit this area. I remember it was something like I was using a Fibonacci. So I was using a Fibonacci line. You guys can find it on the left side of my trading view. You guys can take a look. 1, 2, 3. It's called the Fib retracement. So I draw it from the bottom all the way to the top. And then I set to all Fibs. So you can see price actually tapped very nicely over here. Although there were no zones here, nothing interesting. But price tapped into the 50% Fibonacci retracement line. So it tells me that price actually went into the smart money concepts. We like to call anything that's price is when it's below 50%, it's called a discounted zone. It's discount. Do you want to buy at a 50% discount? Everybody wants it when it's at 50% discount. But when it's on the high side, above the 50% zone, it is a premium market. So in a premium market, people won't want to buy at the top. So if you buy here, you are holding your trade, holding very long if you are in a buy. I'm not sure what kind of methods you guys use. So with that, okay, let me draw the area out again. I might have deleted it. Okay, still here. So I'll just set it to 50%. What I want is confluence. So I do not just rely on smart money concepts only. Oh, I just draw a zigzag. Very easy. Break on market structure, find an imbalance. I also still want to top-down analysis, looking at the 4 hours, 1 hour, larger time frame, and also use the Fibonacci. I like to use Fibonacci. Why? Why do I like to use Fibonacci? Because many retail traders, many traders like us right here, we can use Fibonacci to have our take profit zone if we are unsure a potential area to take profits. Many traders use Fibonacci, and also algorithms. Many trading robots, EAs, are coded with the Fibonacci involved. So the robot can actually have all these zones, price. The robots are actually looking at those areas too. So I'm using Fibonacci as a very, very huge confluence. Price tapped in nicely and bounced. So 1 to 1.28 risk to reward. Okay, this is today. I haven't entered any trade yet. I've been pretty busy today. So let me show you guys this very specific trade. I try to find my trading view. Maybe it might be here. Okay, I will turn on another trading view chart. Open a new incognito window. Okay, tradingview.com. Okay, guys, give me a moment while I sign in. It's under the Apple. Okay, let me sign in. Let me sign in. Okay. Okay, it's still loading. It's logging in. Logging in. Have you guys entered any trade today? Today there's quite a lot of news on the euro dollar tonight. I will be personally avoiding that. It's going to be very, very volatile. So yeah, let's take a look at my account. So I was showing that trade. Okay. Let's find it. I found it. I found it already. So focus on this area, guys. Focus on this trade. Focus very, very clearly. Take a look. What happened to price? What happened? So this was 25th. This area. See, this area I got to find my forecast. I don't want to be presenting the wrong forecast. Where is it? Where is it? Is it this? 0.98998. 0.98. Okay. See this area? Wait, let me get it working again. 25th. Yes, this area. Found it. This was another entry. I think I haven't shown you guys this entry. Okay, I might have missed this out. Okay, I'll show you now. Okay. This is on my TradingView account where I wrote this on the October 25th before it happened. So I had a point of interest. Maybe I can zoom in later, the M2, M3, in case you guys want to see how I refined it down. So I had also a M15 point of interest where I was thinking price could tap in and fly up, or tap into this M15 point of interest before it hits up. So I already had that in plan. I already had that idea at the start of the day. So I was just waiting. I even marked out the previous day high to and buy side liquidity, the H4 point of interest, some candle on the left side to add further confluence to the trade. So price, can take a look where what price did. I load new bars, price tapped into the M2 and M3 point of interest before it hit take profit. So one nice thing also. I wrote this on, okay, not this, is that this? Where is it? Where is it for next week? Yes. I updated this 11 hours ago, but I wrote this on October 22nd. It was on a Saturday. So while everybody was out partying, I decided to prepare for the following week. So you can see on the H4, I expected price to tap into this H4 fair value gap, hit the point of interest, bounce back down, and head up to the, okay, this is a bit more advanced. I won't be explaining today. There is the unmitigated fair value gap, buy side liquidity, where I forecasted that price would hit this area, 1.00863. So let's see where price is at now. Take a look. It hit, it tapped here, bounced down, fair value gap, and continue straight up into the exact 1.00863 area. I like to refine it down. That is why I have this very exact area, and price tapped, and immediately you can see there's a reaction to the area. And my take profit for this week has been hit. It's done for the week. So I'm relaxing. If there's nothing new in the charts, I won't be taking anything. Okay, same thing with gold. I just show you guys a quick one. So gold on the October 22nd, same Saturday, I drew out, price tap into the fair value gap at 1642 area. I was looking at the 1642.348 area for price to continue going up to the buy side liquidity, where the 61.8% and 38.2% Fibonacci lines are located. So this is the H4 chart. Let's take a look. I haven't looked at gold yet, so maybe my forecast might be right, maybe it might be wrong. Load new bars, let's go. Okay, look at this, price tapped in nicely into the 1642.348 area before it rebounded up. Maybe it might hit the take profits, maybe it might not. Hey, Cobus Smith, you said, sorry, how can I find that trading view, the trading view files of yours? Okay, I'll send my account to chat. You guys can follow me. If you want. I will be posting on Saturdays, forecasting the following week if I am free. If I'm free, I'll be posting, I'll be doing this up. So I already sent my account in the chat. You guys can take a look. It's called Doge Stonks. Well, you can read up more about me right here. Okay, yeah, let's move back to the charts. Let's move back. Okay, let's move back. Okay, so for today, I was looking at the 15 minutes. I was actually looking for a possible buy entry, but I think that is invalidated already. So I was looking at this area, a possible area right here, right now. We are in a M15 imbalance right here, where price hasn't tapped in, but it has just tapped into that area. So maybe, just maybe, if we see price break this area, just maybe, and have a nice body close, maybe you guys can enter. Okay, I wouldn't say you guys can enter. Don't enter just because I say enter. Always wait for confirmations. Read up more on smart money concepts first before you guys continue. So with my stop loss maybe at the bottom, I can take profit to maybe right here. There's pretty much quite a lot of liquidity resting right here. So I'll mark out the highest one, the buy side liquidity, where price could potentially hit that area. So yeah, this is the only outlook that I might have for today. But just a reminder. Let's go to Forex Factory. So I typed wrong. I typing too fast. Forex Factory. Okay, so you take a look at tonight. There's the main refinancing rate, the euro and USD, 8.15 and 8.30. So for all these kind of rate news trade, let's think logically. Let's think very, very logically. It's a high, very, very important news. The refinancing rate, previous 1.25, increased to 2%. What can happen? The euro dollar can get stronger if the actual is right, because it's way much better. This is the bank, the interest rate in the banking system. So it's going to be a very, very volatile market. The advanced GDP, USD, coming up, minus 0.6% to minus 2.3%. That is a huge difference. So this is going to be very volatile. 8.15 and 8.30. And 8:45, we have the ECB press conference. So for tonight, if it's like that, especially with the ECB press conference, I am out for today. There's nothing much for me to touch. I would rather take profits and not sustain any losses. Okay, so yeah, I'm probably out. Not probably, I'm 100% out today. It's already 1 hour and 15 minutes to the news. So let's think logically. When there's a red news, I'll just make it simple. A red news coming up. Take it as you are crossing the road. You are crossing the road, but there is a huge truck coming. A huge truck coming. Do you want to cross the road? It's the same as you are taking a trade. Do you want to cross the road knowing the huge truck is coming? Or do you want to wait for the truck to pass by first? Before you look left, look right, check properly before you cross. It's the same as trading. So I would rather let the red news or the volatility, maybe 1-2 hours or maybe tomorrow, let it pass before I safely cross the road. So yeah, you guys can follow me just now on that account. I will be posting maybe some educational materials on smart money concepts for you guys to learn. I'll try to simplify it. Yeah, so if do you guys have any more questions? Do let me know in the chat. Do let me know any questions that you guys might have in the chat. Hey, nice. Today was your first time today. Hey, please come back more often in the next future webinars. I do hope to be presenting. Any more questions? Just let me know in the chat. I'll try my very best to answer them. But if it's I like you, safe way of trading. Yes, just trade very, very safely. Just let the market do its stuff. Do not force a trade. Do not force a trade, man. If you are forcing a trade, it's as good as gambling. If you are gambling, just head to the casino, or you would rather give it to a homeless person, right? If you are just throwing your money in. Hey, Martin, you said thanks a lot for my time and letting us have a view of my analysis strategy. No problem. What I want to do is provide my knowledge for free, just letting you guys, hopefully you guys will be better traders and be profitable. Hey, we'll check your YouTube videos. Hey, thank you very much. Okay, there isn't much, but thank you very much for your support. Okay, I'll give you guys maybe a minute. If you guys got any questions, I'll try to answer them. Else, I would be ending this live stream, this webinar for today. I'll just move it over to the thank you page. So yeah. Yeah, any more questions? Any last few questions? I will answer them. Okay, if there are no further questions, hey guys, thank you. How can we contact? Maybe maybe you guys want to contact me, you can chat with me through the TradingView chats on my accounts. They are already sent into the chat. Maybe you guys can contact me there. just let me know who you are, maybe, so I know that I'm not talking to a random user on TradingView. But again, thank you very much for joining me today. I appreciate the support that you guys stay on and listen. Thank you, Carino Brutal. And thank you, Cobus. Thank you, Martin. Thank you, Michael. Thank you, Abdul. Thank you, Mito Kozosi. Thank you very much for joining me today. And my name is Chen Yongjing, and I do hope that I can share more of my knowledge with you guys in the future, especially more future webinars. So feel free to tune in, learn more about smart money concepts, and have safe trading in the markets. Implement it properly. Thank you and goodbye.
Hello everyone, my name is Emily and welcome to another of our informative videos. In today's video, we'll look at market orders. So what is basically a market order? It's an instruction from a trader to a broker to execute a trade immediately at the best available price. When you place a market order, it means you want to buy or sell a financial asset at whatever the current market price is. For example, whatever price the asset is currently trading at. The market price of a financial asset is currently changing depending on the supply and demand for the specific asset you're looking at. When you place a market order for a currency pair, you cannot specify the price of your trade. For instance, when you place a market order, you will buy or sell the currency pair at whatever the current price is between when you press the buy and sell button and when the trade is executed. A market order is actually the simplest type of order. As long as there is enough liquidity in the market, market orders are usually executed very quickly. With market orders, you do not have any control over the price at which your order is filled. Your market order will be filled at the current price market, which may be significantly worse than the price you can see when placing the order. If you want to trade at or near the current market price, then a market order may be the best option. So when should you use a market order? Market orders are useful in situations where getting your order filled is more important than getting a specific price. This means that you should only use market orders if you're willing to pay a potentially higher price due to slippage. So if you need to buy, sell right away, that's when a market order can be convenient. Thank you so much for watching us, guys.